We're moving from a bull market to a bear market and back to a bull market within just a few days. Yeah, from 1 hour to the next, the market sentiment shifts. And we see this madness created primarily by the war's evolution and Trump's posts. That's exactly why, during this period, we have to be very, very careful with our trading. And all the decisions we make must involve much lower risk because any technical setup we're tracking could lose all relevance an hour later, especially if Trump comes out and makes another post on Truth Social. And I want to show you one more thing. Look at how the Bitcoin chart looks. The S&P chart, the gold chart, absolutely. All three have the same bullish flag pattern, while the oil chart has a bearish flag, meaning the entire market was perfectly correlated. Because markets during this period have been guided by Trump's posts and fundamental factors. All right, let's see what we do in terms of technical decisions and what we can consider. First of all, regarding the Bitcoin chart, we need to understand it had a move we considered bullish in the sense that we discussed a V reversal. But seeing how things evolved and the issue with Iran, this chart and this V reversal pattern turned into a bearish flag. Right now, things seem to be critical, especially since we're in a downtrend and we have a continuation pattern. The idea would be as follows. As long as we're still in it, it doesn't seem to be quite that complicated. The problem will arise the moment we cross and break through this trend line. That's why if this low of 67,500 is broken, we'll enter a zone where I'll only be interested in sell trades. This is on a longer time frame. Let's see what we do on the intraday, because on the intraday, we're still guided by technical factors and the last move we had yesterday. In the current situation, we have an impulse, a bullish flag, and it seems we're seeing a continuation because we're very close to the previous day's high. We're in a no trade zone. That's why I'll be interested to see if we have a breakout of the previous day's high and then look for the bullish pattern and buy trades up to the area of these highs where the price dropped previously, right? And I'll explain at the end how you can get the free course so you can understand what these bullish setups mean and the information I look for to execute. Yeah, so that would be the scenario. These would be the scenarios. Buy above 71,800, right? Or I'm interested in sell scenarios below 67,400. For the S&P right now, I'm also looking for bullish trades, but here it seems things are a bit different. And why do I say they're a bit different? Since we had this breakout, if we go above these highs, in the current situation on the S&P, I have room to look for buy trades up to the previous day's high. So for intraday, in the current situation, I could very easily look for buy trades on the S&P up to the previous day's high. After it rejected from this zone, I'm no longer interested in any type of trade. Only if the previous day's high is broken again, then I would look for buy trades once more. No sell trades during this period on the S&P. On gold, it's the same situation, a bit closer to the Bitcoin idea, because in the current situation on gold, we have the bullish flag, but we see that if this zone is broken, we don't have enough room. Maybe some trades on the M5. Actually, I'd go with the same approach as on Bitcoin. I'd wait for the breakout of the previous day's high, and only then would I look for buy setups and long trades, while oil right now is in a short setup, and we have to see if it works. Yes, here I can already consider that I missed this setup after the breakout and retest of this consolidation with the stop loss above it. We see that right now we're in a move that's on its way to a 1 to 2 setup, possibly for intraday, but by the time this material goes live on the internet, because the move has already started, I'd look for new buy trades from after this low up to the previous day's low. And on the euro here, we see impulse, sideways movement. Let's see, for intraday, what would interest me on the euro? First, let me see where the open is. I'm going to see where I have the open. I see the open is somewhere at the top, and it would look like this. Is this it? Yes, here. So right now, we are below the London Open. That's exactly why, because I want to trade based on the London Open, and I have this support zone. When I have a breakout, I won't take sell trades immediately after the breakout. I'm waiting to see that the move doesn't turn into a false breakout. And if it doesn't turn into a false breakout and I have a continuation and a second low below the previous one, from that moment, I'll look for sell trades. And of course, if we go above the open, because at that point I connect with the previous impulse, right? Which was an impulse on the buy side, followed by a sideways move. At that point, above the open, I'd be interested in buy trades, so that this area would be a no trade zone. Maybe with a very low risk, but I'd go against the open to take a trade on the idea of if a false breakout occurs, but with a very, very low risk. And that would pretty much be my trading plan for today. And for those of you who want to understand more about how I trade, the strategies I have, you'll find the affiliate link to BingX in the description. Create an account on the BingX platform through my affiliate link, generate a volume of $100. You'll also receive some bonuses from them. And after that, there's an email where you send me your UID and I'll give you access to all my strategies so you can understand exactly how I use all this information and how I relate to this plan I'm providing to go and execute and, of course, achieve those much desired profits. And all that's left for me is to wish you a wonderful day ahead. Good luck with everything you've set out to do. And of course, last but not least, smile more often because it doesn't cost you anything.